I'm trying to set this up for a live stream. All right, I think everything's working. Wonderful. Okay, if you can hear my voice, see my screen, please type in yes into the I don't want that. Please type in yes into the chat box and into. Okay, good morning, everyone. All right, we're going to kick off in just a minute. I want to make sure that I have everything in order. And thank you all for your patience. Can you believe that I actually have bronchitis? This cough just won't go away. So if I, have to mute you for a second, please bear with me. I'm sucking on a Hall, so hopefully I won't have any crazy coughing fits. But this month has been like the toughest month health-wise for me. But, I'm grateful. It's all bacterial, and I'm happy that, it's something that can be resolved. Anyway, with that said, let's get to more interesting things to talk about. We've got a lot going on this week. And I apologize for the calendar having an old date, but these are the latest views, and it's just like kind of a technological error. I should say today's date, obviously, and we'll get that fixed. But there are a number of things that we're watching this week, including a relatively busy economic calendar. And to start off, the biggest story is, of course, the conflict in the Middle East between Israel and Hamas. And what's really interesting about this is that we haven't quite seen a significant impact on, let me just show you the stock chart, on the equity markets. I mean, we take a survey of what's happening in the global markets. Yes, and let me just get rid of my indicators. Stocks did fall initially, but not so much. I mean, basically, I think it's like day 8 of since the attacks on Israel, and stocks are, it happened over the weekend, so stocks are actually higher than where they were, which is not what you would expect with conflict, and especially geopolitical conflict. Gold prices are higher, and that one makes sense because gold is a safe haven, and whenever we have what we call the war trade, gold tends to perform well. Oil should also be performing well, and we are just beginning to see the rally in oil, and I think we're going to see a much more significant rally in oil. So what's interesting is that oil has moved, gold has moved, and in some ways, U.S. Treasuries have moved. These are yields, and if you saw the video I posted, I also think it's I have posted it on YouTube. It's called how the Israel-Hamas war could impact global markets. I talked about how one of the implications is the possibility that it could mark a bottom for U.S. Treasury yields, and how it could basically how it could basically drive investors to buy back U.S. Treasuries, which is negative for yields, which means that when they buy Treasuries, it drives up the prices, and in effect drives the yield lower. So we are seeing that. So the only market that hasn't really responded is stocks. And perhaps you could argue that it's just a matter of time, because if we already have the Treasury market responding the way it should to the tensions in the Middle East, we also have gold rallying, we have oil prices rallying, we have Treasury yields coming down. It should be a matter of time before equities start to fall as well. Now, why are equities not falling? Equities are not falling because last week we had, over this past month, we've had a string of good U.S. economic reports. And it is widely believed that perhaps this week's U.S. economic report could be, this week's key U.S. economic report could be stronger as well. And the main report that we're watching this week is going to be the U.S. retail sales report. So I said, the main things that we're watching this week is, number one, the Israel Hamas war, and whether that boils over to a larger regional conflict. And that's when it could really have a big shock to the equity markets and risk appetite. Because right now, seems like investors are just taking it in stride and stock futures are up quite a bit today. And then secondly, U.S. retail sales is another very big event risk this week, and investors will be looking to see whether or not the strength that we saw in non-farm payrolls and inflation carries over to retail sales, because one of the main reasons why equities have performed so well, why the US dollar has performed so well, is because we have seen the US equity market really take off. So we've seen the US data really take off, and it's outperforming many of its peers and making the dollar and US assets more attractive. And that leads us to number 3. Number 3 is the earnings reports, because US data has been better than expected. This is the first time in a while that we have not seen earnings reports notched lower. This is the first time that we have, basically earnings expectations are still relatively lofty, particularly for some of the ones that we're seeing this week. And the main focus this week is going to be on Tesla and Netflix. That overall, it seems like investors are optimistic about this quarter's earnings reports, and that optimism is being reflected in stocks as well. Now, any part of that could go wrong, obviously. The earnings report could come in softer. We could also see retail sales come in softer as higher oil and gas prices kind of crimp, and interest rates crimp the pocketbooks of Americans. And we could see the Middle East conflict boil over as Israel prepares for its ground assault. So the rally that we're seeing in stocks and the stability that we're seeing in risk appetite is looking shaky. And that is the last piece of the puzzle, right? Because we talked about how bond yields are lower for the most part, even though they're up today. Gold prices are up since the Israel-Hamas conflict began, and oil prices are up. So it's really stocks that are the missing piece of the puzzle that's kind of holding up risk appetite. Investors aren't going to go in panic mode unless stocks go into panic mode. And then there's number 4, which is the speech by Fed Chair Powell at the end of the week. Fed Chair Powell speaks on Thursday, and he's speaking right around the U.S. jobless claims report, which is where we have possibility of more data showing strength in the labor market. So the U.S. jobs report, Powell speaking on Thursday, the U.S. jobs report has been strong. Jobless claims, have been healthy, and investors will be looking to see whether that optimism from the Fed chair continues, and whether or not we continue to see the market float the idea of another rate hike this year. And even though the Federal Reserve has not given up on the possibility of a rate hike, Fed fund futures do not show a significant chance, above 50% chance of a rate hike, which means that the market hasn't necessarily bought into that idea. So that it will be important to see whether Powell kind of confirms or casts doubts on that. I don't think he's going to really cast doubt on it, because although maybe he'll express some concerns about the conflict in the Middle East, how it could impact oil prices and risk appetite. But either way, that's something that's going to be very closely watched, because the main driver of the dollar rally, aside from good U.S. data, has been the Federal Reserve's over-optimism. So, or the Federal Reserve's, the fact that the Federal Reserve is holding on to the idea that there could be one more interest rate hike this year. So those are the main things to watch on kind of a global dollar perspective. And for those of you that are kind of new to this, we mostly talk about U.S. events, U.S. dollar, because the dollar is on the other side of like 80% of all FX transactions. So that's what makes it so important, and why how the euro trades, how sterling trades, how Aussie trades is largely contingent on how the US dollar trades. So this week, my outlook for the dollar is neutral. Right now, there's still plenty of reasons to be bullish dollars, but the dollar is severely overbought, and you kind of get a glimpse of that today, where US yields are up, but we are not seeing that rally in yields translated into gains in the US dollar, because as you saw, dollar yen is actually lower, and we'll talk about this charts later, but dollar yen is actually lower, even though US yields are higher today. So my outlook for the dollar is neutral, because even though I think US retail sales and Powell are not going to do much to hurt the US dollar, I think the rally is getting overextended. Investors are getting nervous, and I think that particularly dollar yen is vulnerable for a correction. My outlook for euro is bearish neutral. I think that Eurozone data has been quite weak. German government is warning of a contraction. ECB is talking about no more rate hikes. And we've got the German ZEW survey, which is due for release this week. And the survey on investor confidence is probably softer because on a geographic perspective, Europe is the closest to the Middle East conflict. And they, obviously Euro area is very externally energy dependent. And so they stand the risk of being hurt quite aggressively if oil prices spike. So I'm still bearish euros, but it had sold off quite a bit last week, and we don't have too much going on for euro this week. So it's largely going to be contingent on US data. I'm bearish sterling. We have a lot of UK data, UK inflation, retail sales, jobs report, all of which I think is going to be bearish. I'm neutral Aussies. I think Aussie could pull back on the jobs reports, but for the most part, that's the main report. I think that's mostly going to trade on risk appetite. I'm bullish CAD. There's also a lot going on for CAD this week. We have jobs, inflation. No, we have inflation, retail sales. Sorry, for those just joining me, I have bronchitis, so I'm trying to battle through this. And the jobs report and retail sales report should remain healthy. Kiwi, we just had the PSI numbers released this morning. They were weaker, they were stronger. But the, sorry. The inflation report that we should get this week should be weaker. And then we have Swiss and Japanese yen. I'm bullish both these currencies because I think that stocks should correct, but obviously they're just beginning to rally. All right. So let's look at the economic calendar and go through the events that have been released. So PSI data from New Zealand. New Zealand is one of the best performing currencies this morning because fundamentals matter, and the PSI numbers were very strong, and we did see service sector activity increased, even though manufacturing, which is a much more important component of the economy, deteriorated, service sector activity increased. Today, we didn't have much. We had Japanese industrial production numbers, which were weaker. It's not really a huge market mover. We have no data of consequence in the Eurozone. We do have a lot of ECB BOE speech this week. Canada had wholesale sales. Wholesale sales was weaker than expected, but still a big increase from the previous month, which means that retail sales, wholesale sales is a leading indicator for retail sales, could be stronger. U.S. Empire State Survey was good, another continuation of the good U.S. economic reports. Later today, we have New Zealand's inflation data. Markets looking for stronger reports, but the food price inflation data has been kind of weak. So I think there's risk to the downside for this report. We also have RBA minutes. Tomorrow, we have more going on. UK jobs report, that's going to be probably weaker, given that the labor market continues to weaken with further job losses, according to the PMIs. So that could hurt sterling. ZEW survey, I think that's going to be weak. I don't know how investor confidence could be strong in light of rising energy costs, geopolitical risks. So I think that could hurt the euro. Canada has inflation data, and I think the CAD inflation data should be strong, given the rise in the price component of IV PMI. U.S. retail sales numbers will probably be strong, given the strong labor market. and red book sales. We also have U.S. industrial production, which should remain healthy. A bunch of speeches from Federal Reserve officials, RBA officials, Eurozone officials. We have Chinese GDP numbers, which are probably going to be very weak. That could hurt the Australian dollar. And then on Wednesday, we have UK inflation data. And this one could actually be a little softer because the manufacturing and service sector PMIs reported weaker price components of their report. So the UK inflation data could be a little softer. These are revisions to Eurozone inflation data. So usually revisions are not made, so there's probably not going to be that market moving. We have a lot of U.S. housing data, housing starts, building permits. U.S. housing market is floundering with rising interest rates and slowing growth, so don't expect much from that. Whole bunch of Fed speech, all of which will be very important to listen to. And then we have Australia jobs report. And this should be weaker with the lower manufacturing PMI index. We also have a very good number in August, so some sort of payback is expected in September. And then on Thursday, we have jobless claims. Philly Fed surveys probably will be a little bit stronger after the stronger Empire State. We also have Powell speaking at lunchtime, existing home sales. So Powell's speech on Thursday will be very, very important. And then with New Zealand trade data should be weaker. Japanese inflation data should be weaker. And then Friday, we have UK and Canadian retail sales reports and consumer spending in the UK. As I said, most of UK data this week should be weaker and should hurt sterling, maybe cast out on another rate hike. So these numbers should be softer. Canada, on the other hand, should report good retail sales numbers, and especially with the strong labor market numbers. So I continue to be very bullish the Canadian dollar. So now let's look at the charts to see where things shape up. Euro dollar, as I said, still below all of the major moving averages, showing signs of bottoming, but the fundamentals are not on its side. What's interesting today is U.S. yields are higher and dollar is lower, which shows we we're at a turning point in the markets. You tend to have divergences in how the different markets are performing, as some markets latch on to the idea of things changing sooner than others. And it definitely seems the dollar is kind of lagging behind, as well as stocks compared to bonds and some of the other markets. But still, euro dollar is still in a downtrend. If we squeeze, maybe we could squeeze up to 106, 106.50, but the real contention point will be above 106.50. That's when a truer bottom will be in place. I still think the path of least resistance for euro dollar is going to be to the downside. Sterling, I'm more bearish sterling than I am euros, but in general, I'm bearish sterling because of the fact that I think they're going to see a trend of weaker UK data this week. Support is down at 120.50. Resistance up at 123.50. Dollar yen still remaining in an uptrend, but I think this is, it looks like it's falling. It looks like it wants to at least test 149. I think that should be a relatively easy move down to 149, and then maybe even 148. Deeply oversold, but the market is obviously waiting for data, the retail sales numbers, earnings, things like that. Dollar Swiss is moving lower faster, and you can see I was bearish. Dollar Swiss is below the 200 SMA, which I think is quite significant. It's holding it. I think dollar Swiss could slip down to 89.50. Aussie dollar also showing signs of bottom, but I think Chinese GDP numbers, Australian jobs reports will be important. I think 64 cents, if it rallies up to 64 cents, is a sell, but right now it looks like it does want to squeeze up higher. Kiwi dollar, same story, best performing currency today. Lots of resistance at 59.50. It is kind of struggling a bit here, so we'll have to see how it fares. And then we've got dollar CAD, which I think with dollar CAD, you can see that it's pulling back. Dollar CAD is pulling back, and I think support dollar CAD. I like buying CAD quite a bit. I think dollar CAD could slip down easily to 135.80, and it's consistent with the sell-off in this kind of general weakness that we're seeing in the dollar this week. It's consistent with the rise in equities, and it's consistent with the rise in oil prices. And you can see dollar CAD is in our sell zone. One of my favorite trades today is selling dollar CAD, and maybe even Euro CAD, Aussie CAD. All of those look quite bearish even Kiwi CAD. I just like CAD in general, and that's one of the main setups that I'm looking for. So for those of you just joining us, you know, we talked about how the markets are, well, the key things to watch this week. We talked about how we've got a lot of event risk. Fusing fundamentals and technicals are very important. I think it's, you know, the key to trading well, and that's what we do every day at BK. Is what I do with my zip trades. And right now, you know, my favorite zip trades are going to be short, you know, Aussie CAD, short dollar CAD. I think those are the setups. And the reason is because we've got the longer term trend bearish, as you can see, the red background, we're below the indicator line. Mondays are kind of wonky, but you know, those are the setups I'm looking at going forward for today. And we talk about, and this is these live streams we do every day for our members. So if you want to check us out, check out, you know, bktraders.com. And I'll, you know, we'll drop a special YouTube link after in the recording of this video. So let me let Boris say hi and fire away. And you know, if you have any questions, feel free to ask.
Hey guys, good morning, good morning, good morning. How's everybody doing? Let me just pull up the line.
Yeah, bktraders.com, and you know, we'll drop a special YouTube link after the recording of this.
Sorry, do you guys hear me now?
Yes, we hear you.
Okay, sorry. It was I was playing the YouTube stream. I guess it was back streaming to us. Okay, super. I'm very, very happy to have you guys aboard with us. I'm going to grab the screen right now. I want to tell you a few things that are really interesting. Let me just take myself as a presenter.
I didn't get a chance to talk about gold. Of course, maybe you can do that.
Okay, yes, I'll take a look at gold. I'm going to talk about quite a lot of different things, actually. Hang on a second, screen two. Show my screen. Let's make sure you guys are seeing my screen. Okay, excellent. Okay, I will zoom in on this, I promise you. I just wanted to give you an incredibly eagle's eye view of things, because what I want to talk about today is some very exciting stuff that is happening at BK. A lot more of this is going to be released over the next couple of weeks, and we're going to create a super interesting course around this. And this is that I have taken our 3 proprietary indicators, the Breakaway Bandit, the Tidal Wave, and Extreme Fade, and have turned them into very robust swing trading strategies. Now, as you know, at BK, we're really well known for creating high probability, sort of small risk to reward trades. And so we're always looking for 80–90% accuracy type of trades with small risk reward payoffs. But those are done on an intraday basis for scalping, because that's really what you need to do in order to be a successful scalper or an intraday trader. There's a huge body of traders, and many of you included, who really, really want to trade swing trades. And for swing trades, you need a completely different mindset, a completely different structure to truly make it a successful enterprise, where your risk rewards are actually much more positively skewed. And so what I did is I actually went through all the indicators we have and was created them, turned them into essentially strategies. And I'll be going through each one of them this week to kind of tease you how I modify them, how I change them, and give you some general parameters of how I think they should be traded. And then I'll show you some very exciting results by the end of this week of how they traded over the last 4 or 5 months. But the most important thing that I sort of wanted to show you is that if you're swing trading, you must be trading with a positive risk reward ratio and expect at best, to be right just about half the time. If you can be right half the time with a positive risk reward ratio, you're producing, you're almost, you know, virtually assured of producing positive results. So all of these strategies that I've worked with, and I've come up with some very interesting ideas, are geared towards that type of a function. They also, by the way, trade on a much longer time frame. So for example, this is Breakaway Bandit revamped, and I'll be updating it. So those of you who already have Breakaway Bandit, don't worry, this will be updated into your indicator in the cloud with the suggested settings. Those of you who don't, I highly advise you to come join us at BK, because you can have the access to this. And those of you who are waiting for the course, promise you that there'll be a really, really, really cool course with mentoring coming about how to run all of this in a fully automated fashion. But the important part that I wanted to kind of share with you is that we're going to talk about Breakaway Bandit for a little bit, and then we might as well take a look at gold using Breakaway Bandit, because I think it's very telling as to what gold is doing right now on Breakaway Bandit. So the first thing I want to kind of share with you on the Breakaway Bandit story is that I stripped it to its pure core essence. No more indicator overlays, no more filters, no more unnecessary fluff. The Breakaway Bandit now operates on a very, very simple premise. You have a 20-period high or low breakout. This is very, very similar to how turtle traders have traded. You take that trade. You take that trade. In this particular case, you take that trade with a 1.5 to 1 risk. So I'm going to risk $1 to make $1.50. But I'm going to zoom in a little bit here to show you. As you can see, not only was I able to, hang on, let me just make this a little bigger so you guys can really see the screen. Not only was I able to create the risk reward parameters, which are all completely configurable. So you can create your own risk reward parameters over here. You can set it to 2, you can set it to 1, you can do whatever you want. But what's really, really great is I was able to, you tell me how much money you have in the account, how much you want to risk, and the default settings I have is you have 10,000 in the account and you have 1% risk in a trade. So you want to risk 1%. And I will tell you automatically how much you want to risk on each individual trade. Because remember, each one of these swing trades has a very different stop and a target. There's not fixed stops and targets because they're all dynamic based upon price action, right? So in order to make every trade standardized, you have to use different lot sizes. But to do that, you have to have a very quick calculator. You don't have to worry about that. I've calculated it for you. You tell me how much you want to risk, and I'll tell you what your lot size should be given this individual trade dynamics. So that should be really, really useful to all of you. And of course, those of you who have our own MT5 trading tools, that will also be very easy to configure in that as well, because you can do that in bulk using our MT5 trading tools. But anyways, that's just one of the things. The other thing that I kind of want to share with you on Breakaway Bandit is that you want to be using this on longer term charts. I'm actually using this in a 4-hour chart. These are significant moves. These are kind of swing trades that go for 300-400 points, 600 points in NASDAQ. I mean, really, really large, big moves that you can capitalize on. For example, right now you see there is a long trade here with an 1,100 point target. I mean, that's a very, very large target because the actual breakout candle is quite large. And you certainly don't have to essentially blindly follow the prescription that the trade is given. You can see the trade right now from the signal that was given on the 6th of October is already, it was long 14,939, and it's and we are in it profited all the way to like 300 points. You could have booked 300 points on partial trade on a partial position and just held the rest of the position to see if it can flow further. These are big, interesting, intelligent trades. But what I wanted to kind of show you is that if you go to like a eagle's eye view, right, over the last couple of months, right, and you notice that what I did is I colored the stop targets, the stops at black, so you could easily see the stops are black, and the take profits are either blue for the short side or green for the long side. So you have like, if you go back here, you have a 3-2, 3-3, 4-4 ratio, 4-5, 5-5, right? So if you go all the way back to July, right, this is NASDAQ, you're at a 5-5 ratio. What did I say to you? I said that 50-50 is an amazing statistic to achieve when you're looking for 1.5 risk reward, because effectively you're now, 5 times 1.5 is 7.5 against 5. You're net positive on NASDAQ. And if you wanted to do something a little more immediate, let's say you didn't want to trade the 4-hour chart, you could trade the 1-hour chart, and you would get relatively similar type of ratios, where you're basically trading. What you want is kind of even money, where the stops and targets are relatively balanced, because if that's the case, every single target is making more money than the stop. So you are actually profiting all the time. That's the secret to really great swing trading. So this particular case, you have like, what is that, 1, 2, 3, 4 against 3, right? And you go backwards. This is on a 1-hour chart. So 4 against 4. We go all the way back to August. If I'm going back to August. So over the last 2 months, again, even money, positive risk reward, you're doing really, really well. With Breakaway Bandit. Now let's take a look at gold, because gold I think is super interesting. Because here's what I want to show you about gold. Look at how amazing all of these blues are winning trades. All of these blues are winning trades to the short side. You can see now the blue. I probably should have, I didn't want to make the winning trade red because I don't want to confuse people. So I made the winning trade to the short side blue, the winning trade to the long side green. But it doesn't matter. The most important thing is kind of eyeball it, because what you need to do is get the feel and flavor of what the indicator does. What it's going to say to you is, when you have a strong trend move, as you had in gold to the downside, it's an amazing, amazing pickup of just profit. You're like 4 to the good, 2 to the bad. Now, I think what happens next is, there's so many profits here, I have to get big. The same kind of dynamic goes the other way. We make a V-shaped recovery and we go back the other way. Now profit. So gold is like literally one of the best instruments for Breakout Bandit over the last several months. I think we have, let's just count it over, this is on a 1 hour chart. 1, 2, 3, 4, 5, 6, 7 against 2. 7 against 2 since this is when? This is since middle of September, right? So over the last month, you've had 9 swing trades in gold, 7 to the positive. 7 times 1.5 is 10.5 points to the 2 against 2. So you're now 8.5 points. If you had a $10,000 account and you were risking just $1,000 per trade, you were up $8,500 on just this one instrument and this one indicator. And that I think is very, very exciting, because that creates lots of interesting opportunities and possibilities for us as we go forward in terms of putting together all of these swing trades. I am putting together a very, very interesting course based upon the ideas of some of the best hedge fund managers in the world. And I think hopefully you guys are going to find it very useful, and we're going to combine it with these incredibly useful tools. So the short story is gold is a breakout. It's a trade to the long side right now until otherwise shown. We have a Breakout Bandit trade to the long side. No, so far no trigger just yet. We actually just completed a profitable trade, so now we're looking for a new breakout. We just completed a profitable trade here, so we're looking to see if there'll be a new breakout on gold. We can take a look at oil as well. Another good trending indicator. In this case, oil kind of did a dipsy dip. We dipped down, then reversed. So this kind of a dipsy dip didn't quite. Again, here's a good example. The indicator is looking for very large moves. In oil, for example, is looking for a $3 move, right? And we had like for profit, and it was 85 to almost like it was $2.50 move, basically barely just missed target. Now the good thing you got to understand about swing trades is none of this stuff moves super fast. You're talking about using this stuff, the trades last 2, 3, 4, 5 days sometimes. So you have ample amount of time. If you wanted to book some profits, lock your profits in, you could easily manage your trades this way. But just on a simple, trade in, trade out basis, this is fine. This works really, really well, even if you don't have to manage it. But you will occasionally get these, this kind of a V-shaped move where you're almost to the target and then kind of have to give it up. But now we're obviously clearly gearing up for an upside. For an upside break. What happened to my oil? Upside break here, and it's operating in we have an upside signal. And just to give you an idea of what the target is on this signal, let me just get bigger here. The target is $89. So it's possible we could hit it today if things get really, really bad. As Kathy was saying, I think as far as the geopolitical macro situation goes, it really does come down to Hezbollah and Iran. This is not a war. Anybody who understands the Middle East understands it's not a war between Hamas and Israel. It's a war between Iran and the United States of America. And this is why we have 2 carrier groups in the East Mediterranean. And it's going to be a question of whether the Iranians want to have a existential moment. So we will be watching that. But that could mean disruption of the whole Iranian oil supply. So yes, can oil go to 100 on the Eisenhower bombarding the coast of Lebanon and essentially wiping out the refining capacity of Iran? Very possible. Hopefully those dark scenario isn't going to happen, but that is the risk to the downside. We should all be aware of it. It also means, of course, what is that going to mean to the assets? This is going to soar. Gold is going to soar. All that's going to soar if this happens. Fortunately, let's hope and pray that it doesn't. But that is the this is where the rubber hits the road right now in geopolitics. As I said, Hamas and Israel is a sideshow to what is really the true conflict, which is Iran and the United States of America. And we have to watch that very, very carefully. And by the way, Iran and the United States of America the conflict is China, Russia, behind Iran, the United States of America. So we'll just have to see how close we come to the brink of all of this. And hopefully we'll pull ourselves away. With that cheery thought, I want everybody to come join me live. Amazing new stuff I'm going to share with you on how to scalp flow. We have a very, very solid foundational way to counter trend in trading. And now I have a great way to trend trade for the prop account. So trend trading, we've always had a great way of trend trading, but it requires an enormous amount of risk parameters that are just too wide for most prop accounts. But I think I've cracked the code on how to combine our relatively wide parameters on counter trend with very, very tight parameters on trend. And I'm going to share that with you. It's going to be very easy. It's completely not like anything that you could even imagine. It's just so different. And by the way, same ideas, sort of like a very, very different out of the box ideas I'll be sharing with you tomorrow for the tidal wave indicator, which is also very, very unique. And I had some interesting insights, which I've tested, and they really proved me right. So I'm going to share some of those ideas with you tomorrow. All of this stuff is coming to you. I'm just refining the final passages of code before I release it into the cloud for everybody. And those of you who are interested in trading with us and looking at these great swing indicators, come join us. bktraders.com. Just join us, and you'll be able to get access to everything. So I will see everybody in 10 minutes in my prop trading room, in my day trading room, and everybody have a great day. Take care.